A very busy week for central banks, but let's start with the Fed because we're not just talking about a potential hike or a pause. Even Larry and they're talking about this skip.
The word that came out of the blue about 3 weeks ago, Sherry. It's very interesting. Maybe it's just you need a third category when it's so hard to decide after the Fed has hiked rates month after month, meeting after meeting, since, well, it's 15 months now. So Powell also, very interesting, on May 19th, this was one of the first, he didn't say skip, but he said very clearly that it's time for the Fed to pause. They can afford, he didn't say pause though, they can afford to look at the data, take time to make careful assessments. And of course, that's after they've done 525 basis points worth of rate hikes. And of course, as Mohamed Arian just said, the market had been hiking, pricing in the hike. So after Powell spoke, after Chris Waller, a Fed governor, spoke on May 24th and said he thinks the Fed could take some time to assess the data. Patrick Harker's been from the Philadelphia Fed. He's been arguing pretty ardently for this. Raphael Bostic says if they could definitely pause, if there is another move, it will be a hike, but he seems sort of in that camp as well. And Tom Barker from the Richmond Fed similarly says he's open to watching the data. We've gotten the employment report that was stronger than was forecast, and now we're waiting for the CPI report on Tuesday. But all of them are open to the pause. Now the hikes are the people who want to go ahead. Jim Bullard from the St. Louis Fed, Loretta Mester from the Cleveland Fed, Neil Kashkari from Minneapolis, Lori Logan from Dallas. I mean, another Fed governor, Michelle Bowman, are still concerned that more needs to be done. And in fact, that's why some people think there could be a policy dissent or two. That's not what Fed chairs want to see. Now, we're looking at what is also going to be in focus, and of course, that's the dot plot. Every 3 months, the summary of economic projections are revised, and from their outlook on GDP, and employment, unemployment, and inflation, they say, here's what we think rates are going to do. Well, here the idea is pretty simple. They did think that by the end of this year, the core deflator, the PCE deflator, would be down to about 3.2%. Well, it's a long way from that. GDP is probably going to be stronger than they expected. And inflation, you know, besides that being higher, there's a lot of things that they're going to have to catch up with. So basically, the guidance at this point is going to be very important as well.
It's a busy week, Kathleen. BOJ, ECB, PBOC all meeting this week. What are we expecting?
Well, Bank of Japan, it's Governor Kazuo Ueda's second meeting. At the first meeting in April, going into it, there was a lot of speculation that maybe he could, you know, do a tweak or even open the door to a policy tweak. After all, isn't inflation higher than was forecast? But now our reporting team in Tokyo finding out that the BOJ doesn't seem to think there's much need, if any, to tweak yield curve control right now. That's a policy that keeps the 10-year JGB, Japanese government bond, anchored around 0%. So throwing cold water all the more on any big policy change or even a minor one. Now they are probably going to have to recognize that inflation is stronger. They know that as well. So could they raise their inflation outlook? That's important because once they raise their inflation outlook, they may be taking a step towards a step to eventually doing the tweak. Let's just quickly do European Central Bank. Christine Lagarde, the president, has been signaling that more rate hikes are needed. So that's pretty much a done deal at this meeting. Guidance, people are saying guidance on further rate hikes, what they're watching, that's important there. People's Bank of China, the economy, the recovery seems to have slowed down. It's not as strong as expected. So Gang has expected to reiterate what was said over the weekend by the government. They are going to keep a stable policy stance. The door to a cut in the medium-term lending facility or a triple R rate are not seen in the boards yet, particularly after the government just said.